Hello traders, welcome to the LFB and our global video charting review. This is for the 5th of May 2011. My name is Marco Haig from the LFB Trade Desk. Happy Cinco de Mayo if you do celebrate that. We're looking at the gold and silver trading plan. We'd ask that you pause the video, read and accept the disclaimer before we continue. Looking at near-term charts here, sentiment towards bullion positions remains mixed after 3 sessions of trade that dropped gold from 1576. We've got the silver contract here. Just take a look at the gold contract as well so you can see how much they are replicating each other's move. Silver was taken down a lot quicker, but gold has moved down now to trade just above this 20-day simple moving average, which is down here at the 1500 area. GLD values, which are the exchange traded fund, they're holding above a price channel that was set in the last 2 weeks of April trade, with long midterm reads and mixed momentum midterm order flows now. The $70 drop in gold is being attributed to an overbought reaction to this $46 move that happened on the 29th of April. But the drop lower is in line with the reversal in silver trade that looks to have been initiated by overbought technical conditions, but a massive margin hike by the Chicago Mercantile Exchange for opening and maintaining silver future contracts. So a lot of this movement was after the margin hikes were initiated. The CME, the Chicago Mercantile Exchange, has initiated its 5th margin hike in 8 days. That's unprecedented. And that translates into an initial silver margin requirement of $21,600. And that's 11% of the contract value. And then the maintenance is going to cost $16,000 on that. At these margin levels, it's no wonder that traders are moving towards Forex as a vehicle to replicate the bullion moves, which carry a far less cost of margin and offer 24-hour day access and liquidity in a highly fluid market. Equity, bullion and oil signals and alerts will normally have a Forex alternative that will replicate those moves we've seen elsewhere. One of the signals that we had was April 29th on silver as gold went up and put on 46 bucks on that Friday. Silver signaled short from 47.50. It's hit its 2 main targets and is now consolidating right at the 50-day moving average, which we highlighted yesterday down here at the 38.50, 38.60 area. There are no new silver signals forming, and patience is now required as fair value is found in these bullion markets. Alerts will be sent directly to clients as price action unfolds, but in the trade plan area of the website, we do see that 35 bucks is the downside target if silver does break. 36.95 is the first target, and then we're heading down towards 35 if we get a break below that. And we've got there the 100-day moving average, which will garner some support. The long trend and oversold near-term silver and gold charts are signaling that support may be in place, and alerts are going to be sent directly to clients as things evolve. Existing long bullion positions will likely be held, while newly formed short positions are going to have to run the gauntlet of volatile trade over the course of the next 24 hours, because the next sustainable mid-term move will be dominated by the equity and treasury market reaction to this Friday's non-farm payroll report out of the US. Taking a quick look back at that gold chart, there were major buyers in at 1490 during April trade. Just going to pull this back so we can see just this 1490 area. We've got buyers in. So any downside moves at that price point, 1490, probably going to consolidate hard. But underneath that, we do draw in a test of 1485 and 1465. But again, as noted above, a new short signal has not yet been confirmed. Caution is required in expecting a collapse in gold and silver values. There have been massive market-wide interest in building these bullish trends, and it's going to take a lot more than 3 days of selling ahead of a major news release like the non-farm payroll to get these trends reversed. The LFB client note updates for near-term moves lower have completed their first legs, and positions should now be cleared. There shouldn't be anything open in these bullion markets at this point in time if you're a near-term trader. If you're a long-term investor, you're probably just holding on and you're riding out the dips. The LFB subscribers will be notified the moment that price action breaks. So if you do want to add to your long-term portfolio, we will signal you when the next buy the dip play has completed. If you are interested in picking up this information and detail ahead of time rather than seeing it on the video, get it directly. The subscription services are available from the LFB website. There's new member promotions. You can go to the services tab. You can drop down, you can get membership examples. We give you live examples of what we do, and then we offer some really flexible payment plans for you as well. So please feel free, take a look. Be a pleasure to have you on board. Give us a try. If you don't like it, you can cancel. If you do like it, you can become one of the long-term traders that rely on the LFB trade desk for their daily trading support.